Hi, I'm Patu from freefincal. Let's take a look at ICICI Prudential US Bluechip Equity Fund today. When I compiled the list of international equity funds, I had said we will review a few of them. This would be the first. We'll have a look at other funds in the next few days. So this is an open-ended equity scheme. It's a thematic international fund that will invest up to 80% of its portfolio into US large caps, typically from the S&P 500 index. This is an actively managed international fund. It's got a benchmark of S&P 500. It's not very clear whether that S&P 500 is USD S&P 500 or INR S&P 500, because the two are very, very, very different, as we shall see below. So the natural question now is either for people who are currently holding the fund or for people who are looking for so-called international diversification, whether to use this fund or this kind of fund or to use the S&P 500 index fund from Motilal Oswal. So the comparison becomes natural. The problem is this fund has got an AUM of about 692 crores and an expense ratio of 1.68% for the direct plan. That's a huge number. The S&P 500 index fund from Motilal is available for more than 3 times less than that. So it's like 0.49% or something like that. So the difference is more than 3x, and that's a little too much. So if for that high expense ratio, they better be beating the S&P 500 INR. Are they doing that? That's the question. So, and please recognize, I'm just going to review the fund. Just because I'm reviewing the fund, it doesn't mean I'm recommending investing in such funds and so on. All those questions, should I invest in international funds? How much of US stocks should I hold in my portfolio? What will be the return I will get from the S&P 500 index fund? All those blah 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 questions, all those videos have been done, all those articles have been covered. You can go to this article, which is in the community page, or if you just type freefincal in your Chrome or whatever browser search bar, you should be able to, at least in Chrome, you should be able to get the latest article right when you click on freefincal. For other browsers, you'll have to go to the site. So this is the latest article, you can get to that. So please understand the context of this. I'm just reviewing the fund here. All other questions, should I invest, how much should I invest, all those have been done. I'm not interested in that here. So to first understand the difference between S&P 500 total returns and S&P 500 TRI in INR, you have to introduce the exchange rate, and the red line here is the exchange rate. The blue is the USD, that's the price that you see every day. And if you introduce the exchange rate, the S&P 500 in Indian rupees is phenomenally higher. Of course, it's not going to be, that's from inception. It's phenomenally higher from 1st April or 4th January 1988. But there will be, it doesn't mean that S&P 500 INR will always get a higher return than the USD index. That's not true. That because the exchange rate can go down. People always believe always exchange rate will go up. They will sit and make statements like this without any kind of analysis, which is just nonsense. So please look at my video on what kind of returns you can get from S&P 500 when you invest in the index fund from Motilal, and then you can understand how the dynamics work. So the next is the since inception, or at least since the direct plan inception, NAV evolution of the fund, which is basically in blue. The green is the S&P in INR. So the blue is the fund, the green is the S&P in INR. The green line, which is the S&P INR, has always been above the fund since 2014 or so. So it's the only thing, as we shall see below, is that the S&P 500 INR crashed much bigger than the fund. That's the only positive for the fund. You can see the crash in here is much higher, and the crash here is much higher, whereas the fund, the crash was much lower. And that's the main positive for this fund. All others are kind of not so hot. The next is about rolling returns. We're going to see 1085 rolling returns are there in each colored line. The red is the S&P 500 in INR and the blue is the fund. You can see that the blue line has kind of always lagged behind the red. The same is also true, the situation is also true for over 5 years. And if you look at the standard deviation, which is the volatility, the day-to-day volatility, it's not much of a difference. And so for a similar day-to-day volatility, the fund has been underperforming the S&P 500 in INR. The only thing that's good about the fund, in my opinion, if you look at the maximum drawdown and how it has progressed with time, that is, the maximum drawdown is the maximum how much the portfolio has fallen from a peak, the maximum fall at any given point. If you look at that in 2020, the maximum drawdown for the S&P INR index has been significantly higher than the index, than this ICICI fund. So the main pro of active management has been during huge crashes. There has been two big crashes for the S&P 500 somewhere in about I think late 2018 and this to 2020. Both those crashes, the fund has managed to protect the downside for investors compared to the INR S&P 500 index. That is the key advantage of investing in the fund. But for that advantage, and especially since you're going to be investing over such a long term, would you be willing to spend 3 times more expense? Will you provide the AMC 3 times more in expenses just for that benefit? Is that, it's very, very hard to justify that. It's very hard to say, yes, I will do it. The only caveat is that the S&P 500 has had a nice smooth run, except for those two movements since 2008 pretty much, and we don't know how long that's going to move. There sooner or later, there's bound to be some kind of a stretch of poor returns. During that period, will this fund do better? Will active management do better? Is a question that it's not, I mean, it's going to be it's anybody's guess. Nobody can answer this way or that way. But if expense ratios bother you, and if you think index is enough for me, then the S&P 500 index fund will do. But how well will an Indian fund manager be able to invest in 500 stocks and track the S&P 500 is a question that remains to be seen. If I don't know how many stocks this has got, 50, 60, if I'm not wrong, I don't know. But that's one thing I have about a S&P 500 index fund from India, an India-based S&P 500 index fund, because both these funds are not fund of funds. They are direct. They invest in US stocks directly. So that's the only issue with respect to that fund. We have to see. That's too young to see. It's just been a few months. So we'll see. But as of now, the S&P 500 does look much more favorable than the ICICI Bluechip based on this data. Bye-bye.